Let's get to West Africa, where the Bank of Ghana delivered a whopping 200 basis points interest rates cut down to 27% as the country's inflation slows down. The big rate slash was the biggest of such since 2018 in the commodities-rich West African economy. Take a listen to the governor, Ernest Addison.
The banking sector's performance continued to improve, with assets growing at 38.7% at end August 2024 compared to 19.6% in August 2023. Both pre-tax and after-tax profits were higher in the first 8 months of 2024 relative to the same period last year. On solvency, the capital adequacy ratio of the industry stood at 10.3% in August 2024, higher than the 7.5% recorded in August 2023. With reliefs, the capital adequacy ratio was 13.8% in August 2024 compared to 14.2% in August 2023. Liquidity and efficiency ratios also improved during the first 8 months of the year, highlighting that broadly key financial soundness indicators are improving in the banking sector and remaining positive. Despite these improvements, the NPL ratio was 24.3% in August 2024, up from 20% in August 2023, reflecting increased defaults from large borrowers and highlighting that elevated credit risk remains the primary concern for the sector's outlook. On the international commodities market, trends in the prices of Ghana's major export commodities were mixed. From the beginning of the year to August 2024, crude oil prices declined by 2.1% to settle at an average price of $78.9 per barrel due to slowing demand in China and the US. Cocoa prices eased to $7,409.5 per ton in August, after climbing to an all-time high of $10,116.8 per ton in April 2024. In contrast, gold prices rose by 21.3% on a year-to-date basis to an average price of $2,469.39 per fine ounce on the back of geopolitical tensions and expectations of rate cuts by the U.S. Federal Reserve. The external payment position was strong in the first 8 months. The trade balance recorded a provisional surplus of $2.78 billion, higher than the surplus of $1.66 billion recorded in the corresponding period of 2023. The surplus was primarily driven by an increase in gold and crude oil exports. Total exports went up by 22.3% to $12.92 billion. Notably, gold exports rose by 62.2% to $7.27 billion, while crude oil exports went up by 16.7% to $2.7 billion. In contrast, cocoa exports, both beans and products, fell by 42.7% to $917.8 million in August 2024, mainly due to the challenges posed by extreme weather conditions. The total import bill increased by 14% to $10.14 billion over the same period. Of the total, oil imports increased by 3.6% to $3 billion, while non-oil imports went up by 19% to $7.1 billion.